Although flipping houses is one of the best and most profitable ways to earn money from real estate, the recent economic changes are making it more appealing to other options. But it's important to recognize that it's not the sole method used to earn money from real estate. You may find other methods that are more profitable and are equally profitable, but you must ensure that the strategies you employ to invest are up to date and aligned with the current market conditions. Evaluation of property. The evaluation of properties is an integral aspect of the investment process. This stage includes analyzing the worth of a property and determining its market value. You can use many methods to evaluate a property. It is based on the kind of property it is located in or location, as well as the accessibility of pertinent information. Generally, a certified appraiser performs the property valuation. The real estate investor is also skilled at this. A typical appraisal costs between $300 minus $400, though costs may differ based on the size of the property. The income-based approach is typically utilized for rental and commercial properties and involves calculating the market value of a house using its net income as well as its capitalization rate. Leverage. Leverage is an important strategy when it comes to real estate investment. The investment can be as low as 30% of the property's value in this type of strategy. It's possible to make use of this type of investment to pay off debt and increase appreciation to 100%. Utilizing leverage to purchase properties can be an excellent way to diversify your investment portfolio. You can purchase several properties at once, increasing your earnings. However, make sure that you research the properties that you intend to purchase. The property should be managed by the owner. One risk associated with the leveraged property market is over-leveraging. Over-leveraging can lead to your house losing value much faster than you borrowed. In addition, you might come across a scenario when you must sell your property and have to lose money when you do so. One of the most commonly used ways of leverage within real estate is mortgage. Most people use mortgages when they are buying a home for the first time. These loans are available from various financial institutions. If you are a first-time buyer, FHA mortgages are an excellent choice. Be sure to check the credit ratings and reputation of any lender prior to make a decision. You should avoid any lender that has a bad reputation or gives unsavory phrases. Leverage real estate strategies are the best way to diversify your portfolio and create long-term financial wealth. Real estate investment is difficult and can take long. It will require a substantial down payment, extensive research, and patience to close the deal. However, leveraged real estate strategies can help you to facilitate the process. Another strategy that is beneficial is to use money from other people for real estate investment properties. Utilizing this strategy effectively will help maximize the return you earn. Think about the scenario that you wish to purchase a house that is worth $150,000 and require $50,000 for rehab. A hard money loan is taken out and 10% of the purchase costs will be paid back. The remaining half of the loan to pay for expenses for the rehab. If you finish your rehab and then sell the house, you'll have a home with a value of $350,000. Multifamily properties that bring value. Value-add multifamily investments offer real estate investors a variety of options that could yield higher profits. Value-add deals can involve either large or minimal renovations depending on the approach picked. The possibilities include adding features or changing the appearance of units. These renovations are meant to improve cash flow as well as lessen costs. These will assist in making increase the value of the home. Multifamily assets that add value make a good investment to both experienced and new investors. Although they need substantial investment, they also have the potential for excellent yields. These types of investments are best for those who can manage their risk and be able to manage volatility. Engaging a professional multifamily advisor can help identify strong value-add opportunities for multifamily. You must acquire property for an affordable price before you make money from this kind of investment. Most of the time, value-add deals off-market can be found with a reduced price because there are fewer competition. It's important to understand that the worth of a property is contingent on the demand. Multifamily investments that add value will be attractive in locations with a low supply and a high demand. Value-add multifamily asset investments and real estate syndication can be another option for real estate investment. The projects typically follow the steps in a sequential order. There are many syndications that use the same structure, but there are common elements for good value-add opportunities. These types of projects typically require an overhaul of the management team and the implementation of operational improvements which will cut operational costs and improve net revenue. Value-add projects typically involve two forms of finance: floating rate credit for construction loans as well as a long-term loan after repairs are completed. Investors looking to make value-add multifamily assets typically select one with the lowest interest rate for the construction project. Value-add investors won't accept the risk if it doesn't desire to accept it. Therefore, they will seek fixed-rate loans with lower interest rates. Multifamily assets that create value could yield substantial gains. Professional sponsors are able to control risk and offer sufficient resources to accomplish their objective. alternatives. Yet, value-add investments can be very profitable. As with any property investment, it is important to thoroughly evaluate the business plan and strategy of the investor. The owner should be able to explain the plans for investment as well as the potential risks for multifamily property that can be valued at more than one family. The art of flipping houses. If you're looking to become a real estate investor, it is possible to think about buying houses and flipping them as your investment options. This investment strategy is a great way to make a quick profit through a home. Based on Atom Data Solutions, the most profitable home flipping was $67,000 in first quarter of 2022, an increase from $43,500 during the fourth quarter of last year. However, there are several things to take into consideration prior to embarking on this adventure. Firstly, you need to identify the ideal property. Find the ideal property regardless of whether you plan to rent it out or selling it quickly. This will require extensive background research as well as educational training. You should also seek financing through a loan provider or obtain a pre-approval document. A different aspect to take into consideration while investing in real estate is its price. If you are looking to buy an apartment that is cheap cost and then to offer it for sale at a greater price. Even though this isn't so simple as it seems to sound, it can be extremely profitable if you use the proper strategy and show perseverance. Remember, this type of venture is not suitable for those who are new to it, as you could be prone to mistakes during the course of your journey. There is a chance to get the assistance from experienced agents who can provide you with valuable insights on the local market and aid you in understanding the buyer's needs. A further benefit of flipping homes is the fact that it allows you the chance to accumulate equity for the future rentals of homes. It's possible to take money out of the profits from a flip to finance other projects. So you get rid of the cost of interest on several hold costs and mortgages. Also, this is more affordable as opposed to taking out a loan. For long-term investment in real estate, house flipping could be an excellent possibility. You can invest in multiple kinds of properties at a time, and it comes with much less risk than other investments. However, there is numerous risks with investing in real estate as well as those that relate to maintaining a house. I hope you enjoyed the video and would now appreciate if you subscribe to the channel. Also, join our newsletter for free additional tips and gifts. Also, enjoy these tips about real estate. Investing in real estate. There are numerous benefits of the investment in real estate. It's not linked to other asset classes, such as stocks. It could be incorporated into portfolios to help reduce fluctuation and enhance the return per unit of risk. This can be a fantastic protection against the effects of inflation. However, it can be expensive and needs perseverance and a sufficient amount of sources. The investment in real estate can provide a number of opportunities for leverage. This means that you can borrow money in order to buy more homes than you would with the funds you own. In the stock market, it is mandatory to pay for total value at time of purchase, but by investing in real estate, you are able to borrow less percent. Margin buying is also referred to as margin investing. Purchase and selling properties. It is essential to take into account several aspects when buying or selling a property. The first is to determine what price the purchaser will be willing to pay for the property. It is also important to ask to provide a copy of every document related with the house. This way, you can form an educated opinion about the worth of the property. Consider your location when you're considering the property which you're selling or buying. The property's value will be reduced value if the property is near an expressway or busy streets. Leverage in real estate. Real estate leverage is a technique that allows investors to borrow money in order to invest. Investors can use this technique to purchase property beyond their financial capacity and increase their investment return. Real estate leverage is usually obtained through loans or mortgages. While it is a great way to boost return, however, it's crucial to be aware of the fact that it could be a negative impact as well. Utilizing leverage to purchase real estate could increase the value of an investor by increasing the income they receive from rental. Furthermore, it decreases risk. With no leverage, the money you invest in a property may perform badly and cause loss. With leveraged investments, properties provide income even in the event of a failure. The tax benefits of investing in real estate. A real estate investment can bring many tax advantages, such as the possibility to claim mortgage interest deductions and property tax write-offs. Furthermore, many investment properties qualify for deductions from depreciation and other operating expenses. The expenses, even though not being tax-related at the time of their look, will help you save a lot of money over the long term. Refinancing is another option to receive tax advantages. Refinance refers to swapping an existing mortgage for a loan with a lower rate. The new mortgage provides new money at lower interest rates. This lowers the amount that you pay each month.